Testing, testing, 1, 2, 3. Thank you for tuning in to another edition of the PulseWave Report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave Price Trigger Reports. Ladies and gentlemen, we have some more to talk about. Just when I thought it was safe, just when I thought we could move on to other topics, well, we can't. We can't. Nope. Because there is something going on. There's something going on. All right, ladies and gentlemen. You know, when I break stuff down, it normally comes out in the mainstream sometime later. Okay. Ladies and gentlemen, you need to understand that the powers that be are flexing their muscles this morning. They are flexing. They are saying, you know what? We control this. We do whatever we want to do. You don't control nothing. You are not more powerful than I, the wonderful Oz. That's what they're saying. They're saying that although you can play in their sandbox, they still control and rule the sandbox. And that's what's going on today, ladies and gentlemen. You need to understand that. All right? You need to understand that. This is what's going on. You don't have to like it. You ain't even got to understand it, but you do have to address it. You got to deal with it. Okay? Remember when I said that I knew something was going on, but I just couldn't put my hand on it? Remember I said that? I said I just can't, for some odd reason, figure it out. I said I don't know what the overall plan is. I can't tell what the agenda is. Well, I think I may have found it out now. I think I may have figured it out. I think I know what it is that they are doing and why they did it. I figured it out now. I figured it out. Take a look at this. All right. So this right here, they're showing you what's going on, like in AMC, what's going on in GameStop, right? All right. For some odd reason, what I want to show you is not letting it, it's not coming up. It's not letting me show you. And I don't know why. This is not cool. There's something really neat I want to show you. All right, maybe this will work. Let me see. Can y'all see that? Hopefully y'all can see that. All right, one of the homies posted this in the trading room this morning. So I want you guys to see it. If you can't see it, let me see if I can make it a little bit bigger so you can see it. All right, ladies and gentlemen, you should be able to see it now, okay? This here is just right in your face. Let's read it together, shall we? Securities with trading restrictions. We have placed some restrictions on the following securities. These restrictions will not prevent clients from making basic buy and sell transactions. Underline the word basic. This list is as of February the 1st, 2021, 4 p.m. Eastern Standard Time. The list of securities are as follows: AMC, CVM, EXPR, FOSL, GME, NOK, BB, BBBY, Fizz, GSXIRBT, NCMI, TRUONEVIRNAK, DDS, and KOSS. Many of you are very familiar with some of these up here, like the GameStop, the AMC, Bed Bath and Beyond, et cetera, et cetera. The following restrictions are in place. Here's where we get interesting. Stocks, 100% holding requirement, not marginable. So if you want to buy 100 shares of one of these mentioned stocks, you got to have 100% of the money. You won't be able to buy it on margin. Next, long calls and long puts are allowed, meaning they're only going to let you buy calls and buy outright puts. Covered call and short put orders may only be placed with a broker. Please be aware that times to speak with a broker may be longer than normal due to current market conditions. Covered calls only allowed if your account currently has the shares. Short puts only if you have the maintenance/cash to cover the entire exercise amount of the short puts. All other complex options orders will not be accepted. All other complex option orders will not be accepted. Please keep in mind that this list is not inclusive of every security restriction and may change at any time. Learn more about our position on the events of the past few days in this statement from Charles Schwab. This was sent out to TD Ameritrade retail clients. This was not sent out to CPAs. This was not sent out to the hedge funds. This was not sent out to the sovereign wealth and private equity funds, any type of a fund. This was sent out to the retail spec. They're basically telling you in a nutshell that going forward, okay, fine, you pulled one over on us, but it's not going to happen again. You got us this time, but we're not going to let this happen again. There will be no repeat of this happening again. You do not get to use the tools that the elite use. Charles Schwab is making it clear that they are on the side of the elite. Let me explain to you what this has done and what is currently happening right now. All right, this is happening for a reason. Okay, show you squoze the elite. Some of them you even blew up and caused them to get put on margin call and they had to cover at a loss. But then there were some others who were well capitalized and they trade a lot smarter. Do you know what you did for them? They used you. Yes, you guys got rich. Those of you who were smart enough to take profit. Those of you who had the proper tools, such as the PulseWave price trigger reports. But for everyone else, you just got dissed. See, here's what happens. And you probably didn't think about this before you guys jumped on board. Okay. So a lot of these funds are extremely well funded. They're holding tens of billions of dollars. All right. Some even more than that. So what you allowed for them to do was to wait on the sidelines, hold their current positions, not getting shook out of their positions, And when you ran it up to $500 a share, you allowed them to pile on 100 times more shorts than they had before. Then, with a little help from their friends in high places, i.e., the exchanges and the brokerage firms, they said, yes, we will do your bidding. We will make the path clear for you once again. We will restrict the retails from getting in your way and interfering with what you are doing. And now the road is wide open for you. We shut down all lanes of traffic except for one little restricted lane just for you to drive on. So now, with the removal of the retail spec from being allowed to short these stocks, you allow the price discovery to collapse. So now that you have been removed from the equation, these stocks are plummeting once again as they're going back to where they were originally. Yes, ladies and gentlemen, you have not stopped anything. You have not done anything. What you have done, actually, is made it so that these guys are now even richer. You've made them richer, way richer. That's all you were able to do. You made them rich. Yeah, because now GameStop is falling. It's down $109 a share, back down to the hundreds from 500. What do you think about that? What do you think about that? What are the odds of that? What are the odds that this would happen? Who knew that they would come in and that they would make the way possible for their clients to make back the money that they lost while they were holding the shorts? You can't make this stuff up, people. Just take a look, why don't you? I told you that something wasn't right. I knew there was an end game, and there you have it. They are paying them back. All the ones who got stopped out and had to get out of their positions, who got squoze out, all you did was allow them to put on new positions at an even greater price. GameStop has never been a $500 stock. You just made the elite more money than they could have ever imagined. It's called a pump and a dump. They got you to participate in the pump and dump, and you did. And now you're left holding the bag while they're getting rich. This is unprecedented, ladies and gentlemen. You just made them thousands of times richer. You have fallen from $500 down to $100 a share. Most of these guys are only short for maybe $20, $30, $40, $50 a share. But now you made it so that they're short from $500 a share. Do you understand how you have been used and abused yet again? You have fallen for it. I warned you about this. I told you about this. All right? Now, the same thing is happening this morning in silver. That extraordinary gap is being filled as we speak. Silver will probably stay down for the rest of the day as this market continues to pull back and snap itself back to reality. But make no mistake, ladies and gentlemen, when they are ready, and it won't be long now, when they are ready, if this is a real bull market that is starting in silver, the market will be up between tonight and tomorrow in a powerful way. You need to understand that. And this time there will be no gap, so the market will be allowed freely to run, if that is what happens. We'll have to wait and see how this market closes. But keep in mind, gold was not participating. You can't have silver rallying without gold. I'm sorry. It doesn't work like that. They usually are both in the same trend at the same time. The problem you had with this silver pump and dump is because gold has been in a bear market according to the algo charts. Meanwhile, silver was in a bullish type of a zone. So to see these things happen, it must make you think and think wisely about what's really going on. Not only that, but did you know that Tesla has recalled 134,951 vehicles? And now because of it, Musk is saying he's going to take a break from Twitter. He's going to take a vacation from tweeting for a while. You don't say. And do you see the power of the US dollar rallying back with a vengeance? You can't make this stuff up, ladies and gentlemen. I tried to tell you. The elite, they're always going to be 10 steps ahead of you. This is why the pros like myself exist, to help you so you don't get your hands cut off. Because that's what's happening right here. All right? They are schooling the rookies this morning and punching you in the face. See, you guys are crying, oh, this is not fair. You don't understand. This is not new, ladies and gentlemen. This happens all the time. Whenever the little guys, eating their lunch, they change the rules or they raise the margins. Like I warned you that they were going to do. I told you that that's what's coming. I said it's coming. Now they're raising the margins. You need 100%. And they're not going to let you short them. Now you think that's not fair and blah, blah, blah. This ain't new. And nope. And it didn't just happen on 9/11. No. This has been happening several times since 9/11. As a matter of fact, you can make an argument that it has never stopped since 9/11. Do you know how many times shares have been restricted? The king of all stock restrictions is none other than the ETF TLT, the long bond ETF. That has been on the do not short list forever. Or you'll come back with something like this. Your broker will say, I'm sorry, we couldn't locate any shares for you to short. So sorry. Try the TBT, which is pretty much broken and doesn't work. Yep. That's what it is, ladies and gentlemen. Welcome to reality. Yes, the markets are managed. Yes, to some degree, they are rigged. But they're not necessarily rigged against you, all right? It's not about you. The markets are rigged not against you, but they are rigged for the elite. They enact rules and legislation that they are exempted from, but not you. You have to abide by those rules, and they will enforce them on you, but they get to sidestep them. Always remember that. Any kind of rules and legislation that you're begging the government to enact, keep in mind they're going to be against you, but for the elite. They won't have to abide by these rules, ladies and gentlemen. Okay? I'm trying to help y'all. I'm trying to school you. I'm trying to put you up on game. You need to understand how things are going right now. You need to understand that this is the world you live in. This is how they get down. And it hasn't changed. Nothing has changed. This is just par for the course. This is more true. This is more proof about the corruption I was telling you about. Okay? Now that all the specs have been moved out the way, GameStop will go back down to $20 a share and may even go to zero this time. They're allowed to short the stuffing out of stocks with no rules in place. But you better not try it. You bet not try it. Yep, they won't let this happen again. This will not happen again. Okay? I'm just saying. Please wake up to what is happening. Wake up to what's going on. My thoughts on oil. Well, for the most part, I don't really have any thoughts on oil except for what's in the reports. Whatever is in the PulseWave reports for crude oil, that is my opinion. I've gotten to the point now where, I don't really have an opinion on things anymore. I just trade what I see and I take what the market gives me. Yeah, crude oil is hitting, new 52-week highs. And OPEC is still complicated and playing games, and so is everyone else. That's why the crude oil market is the most gangster market on the planet. It always has been, and it will always continue to be. It has done things that other markets are not allowed to do. It has done things that other markets cannot do and are prevented from doing and kept from doing, such as going down on negative $100. Show me at any time in history where a futures contract that is still trading and operating today was allowed to fall to negative $100. I'll wait. I'm just saying, ladies and gentlemen. I'm just saying. So now you have to think about what's what. I told you this is big money in this silver market. It is not your Robinhood traders, because according to them, they're not sophisticated enough. How fast you gonna get a futures account going? Most people don't know jack about futures. All right, futures trading has always been for sophisticated, and that's where the elite play. They play in these futures markets. Don't get it twisted. Yeah, they do equities for other purposes, but they mainly operate in the futures market. That's where your big money is. Always remember that. Never forget it. The futures markets are ginormous. All right, they're only second to the crypto market. I'm not crypto. I'm sorry, the forex market, which is $1 trillion a day market. Futures are humongous, and that's where they really play, because there's no rules per se. You can go in and slam silver anytime you want to. You can make it run up anytime you want to. The only thing that they got rules in place is position limits. That's the only thing that keeps it going, is the position limits. I don't care how rich your fund is, you can only buy X amount of contracts in the futures market. Every futures contract is limited to a maximum amount of contracts. Plain and simple. And there is no uptick rule. There's no pattern day trade rule. There's no insider trading rules. None of that apply in the futures and forex markets. That's why I like them so much. And I don't have to wait until 9:30 a.m. Eastern Standard Time to place an order. They trade around the clock. They start at 6 p.m. Eastern Standard Time Sunday evening, and they keep rocking until like 5:30 Eastern Standard Time in the evening on Friday. So we're good. I can roll out of my bed in the middle of the night while I'm going to the bathroom and place a trade. See what I'm saying? You can't do that in equity shares or ETFs. You are limited. All right? They don't trade around the clock. That's why they have these ginormous gap ups and downs all the time. The only time you see futures gaps is on Sunday night when the market opens and during contract rollover. There can be gaps. But that's it. And futures markets are designed for short-term trading or day trading because the contracts expire. All right? Stocks don't expire, but futures contracts do. Forex doesn't even have any contracts. Forex is more akin to the crypto market. Forex market trades just like the futures do, but you don't have any of that either. You don't have pattern day trade rules. You don't have any of that stuff. And with the Forex, there's no position limits. The way they do it in Forex is they have exposure limits. So, for instance, as far as your leverage is concerned. They have leverage limits. So you can never go over a certain amount of leverage. In the US, the standard leverage, max leverage is about 50 to 1 in forex. That's about it. Overseas brokers will let you go as far as 200 to 1. I've even seen one that was 500 to 1, which is just insane. All right, so it's different. All right. Now, I'm gonna play devil's advocate. I'm gonna break it down both sides of the aisle, because you got to have a full orbed view. You got to have a solid understanding to what's going down. All right. If you don't like TD Ameritrade Thinkorswim owned by Charles Schwab, if you don't like Interactive Brokers, or you don't like this broker or that broker, please understand. Technically speaking, just so you know, technically speaking, this is from a guy who is an insider. All right. I did the Wall Street thing. I worked at several different firms. I know what's going on. I ran a trade desk. I understand the business. The broker is not your enemy. The broker is not your enemy. Ignorance is your enemy. Understand that you have to go through a broker if you're going to buy and sell equities. You got to go through some type of middleman, whether it's Robinhood, whether it's, Fidelity. You got to go through someone. Unless you buy a seat on the exchange, then that's the only way to do it. But there's really no floor traders anymore, technically speaking, in a historical terms. So everybody's been kicked off the floor, and they're trading at a computer screen. So for the most part, this is what you're dealing with. They're not your enemy, believe it or not. The broker is not your enemy. All right, just understand who they work for. They don't really work for you. They work for the elite. You're now in bed with the elite when you're involved in these markets. You're in bed with the elite. All right, and we know that. We understand it. You just have to know how to work, how to move, how to flow in this environment. A lot of people are poo-pooing right now because they're like, well, if they're going to restrict me, well, I don't like it. I'm going to take my business elsewhere. And you're going to experience the same thing wherever you go. All right, because this is how it is. You don't have to like it, but you can work around it. Come on now. I'm not the only one who's been doing this for decades. How you think we're still doing it? Do you know how many times the rules have changed since I've been trading? Do you know how many times the margins have changed? Are you kidding? Remember, stocks used to be traded in fractions. There were no decimals. And there was no online trading. There was no internet. You had to pick up a phone and call a broker and be on hold for 45 minutes or longer. Sometimes you couldn't even get your broker on the phone. You did not have direct access to the trading desk. You had to get on the phone with your broker, whether that was a commodities futures broker or a stock broker. You had to pick up the phone. Buy me, sell me. That's how you had to do it. And if you didn't know what you were talking about when it came to trading futures, oh, it was horrible. They would hang up on you because they don't have time for you. The phones are lighting up. Thousands of people are calling. They ain't got time for you. Can you tell me how? No, I can't. Click up. That's how that went. Facts. So we made it work. We worked around it. We figured out a way to win. Ladies and gentlemen, there's nothing new under the sun. We've been in this environment forever. There's only a handful of us on social media that's even, helping people. But let me explain something to you. The rules are about to change again. But you can still win. You can still win. You don't have to operate in the equities market. You can say, forget it. I'll just trade futures and forex and crypto. You can do that. That is your right to do that. And for most of you, you'll probably do better because you can get in and out and you don't have all these rules like you do with equities. See, equities, just to be honest with you, they have their place. They have their place. Don't get me wrong. They have their place. But you will make more money in the long run over time if you learn to trade futures and forex and crypto, because they don't have all the rules that equities have. Equities are the most regulated market on the planet and always have been. Always have been. Don't ever forget that. Understand the markets that you're operating in. All right? You need to understand this. All right, I see you, Dave. You said the broker is the enemy if they trade against you. Okay, let me explain that to you too. All right, you got to understand that. Okay, that too is nothing new under the sun. The brokers have always taken the other sides of your trades. They did it before you were born, and they will continue to do it after you and I are long gone. That is not new either. All right, before you and I existed, they had the bucket shops where you could go in and you could take a look at the ticker tape and you could buy and sell securities, stocks, that is. All right. And every time you went to the bucket shop to place an order to buy some stocks, some shares, the bucket shop would take the opposite end of your trade. All right. This was before you and I were born. And probably some of you under the sound of my voice, this is before your grandparents were born. That's how it operated. That's how it got down. All right. So remember, there was no television either. No television. All right. All you had was the radio. That's all you had. And that didn't come along until after a while. So understand how things work, ladies and gentlemen. They didn't have the technology we have today. And people still made money. They made it work. All right. Brokers have always taken the other side of your trade. Not every broker, but for the most part, it was a common practice. The house always took the opposite side of your trades. Come on now. Why do you think that is? Because they think that you are the dumb money. All right. Just understand that going into it. Not all brokers are created equal. Some do things, others don't. Some lend money. Some operate like a bank. Some don't. Not all brokers take the opposite side of your trades, but a majority of them do. And in the forex world, that's all they do. The way that the technology that they use, the interbank system, is designed for them to take the opposite side of your positions. That's how they make their money. Because they don't charge commissions. They make money through the spreads. All right. So understand that. And truth be told, your money, you're really not going into the market when you're trading forex, unless you're at one of those specialized outfits and you're going through some type of bank or something. But you're not really going into the market. You're basically you're on a PlayStation. You're in a virtual thing when you're trading forex. You're not really technically in that market. Not like with stocks or futures, where you literally are in the market. In futures, for every buy order, there's a sell order and vice versa. All right, order matching, especially if you trade instruments on Globex and things like that. Equities is different. All right, so that's your little primer on that. All right, so trade desks are not the same either. All right, there are different ways to run that business model, but for the most part, like Robinhood and Acorn, they don't have a trade desk. They don't have a person that when you call, they pick up the phone and they can place orders for you in the market or get you out of positions or give you a quote on a particular security. They don't have a trade desk to do that. Schwab does. Interactive Brokers does. Fidelity does. TradeStation does. They have it. But here's the drawdown with that, though. If you pick up the phone and call a broker to place a trade or to get out of a position, there's a charge. All right. And that fee is pretty substantial in today's terms. In historical standards, it's nothing. It's a drop in the bucket. Average price is like $19.99 or something like that, or maybe even $30. Who knows? It could even be 40 or 50 now. I haven't placed a trade on the phone in a very long time, but it's somewhere around in there between 20, 30, 40, 50 bucks. The sad part, though, is that if you want to do certain things, as what I read to you earlier, they're forcing you to call the trade desk to do it with their long wait times. So the question should be, are they prepared to give you a discount and not charge you for having to call the trade desk? All right. That would be the question I would ask. And then the second thing would be, okay, since you're forcing me now to have to call the trade desk, and I have to, speak to someone on the phone, are you prepared for possible lawsuits? Because if a person can't get out of the market and they're losing a lot of money because they were on hold, and you made it that way, you said the platform won't work for you, you got to call the trade desk because you turned that feature off. Is the broker now prepared for possible lawsuits or a class action lawsuit? Because see, that's the give and take now. Back in the day, it wouldn't matter because there was no online trading. You had to pick up a phone anyway. But in today's world, where there's online trading, I can just click my mouse and get in and out of positions. They're not offering that in these handful of securities. Now, to put things in their proper perspective, it's only a handful of securities. It's not the entire market. They're not saying that you can't do those complex options trades. You can't do butterflies and condors and iron condors and bull call spreads and bear put spreads. They're not saying that at all. They're just saying in those handful of securities, they're not allowing that because that's what the elite are holding their incredible short positions, and they're not going to let you get in their way and ruin that for them. You ain't got to like it, but you do have to acknowledge it. And that's all I'm trying to say, man. I'm just saying. It is what it is, man. I see your question, Dave. I'm hoping that I answered that. The non-dealing desk, the dealing desk. Like I said, it depends on the type of broker you're working with. If you're overseas, if you're in the States, if they're connected to a bank, it all depends. Most desks, though, like I said, they're using, especially in the States, it's basically an arcade. Your orders are not really going into the forex market with the banks per se. All right, so they're not really dealing; they're non-dealing in that regard. Anywho, moving on. So this is the game, and it's always been the game, and we understand the game. That's why we play it, because we know how to navigate it. And like I said, you guys, now more than ever before, you have to have the PulseWave reports, man. There's just no way for you to be able to navigate this circus without it. In my opinion, you've always needed it, but now more so than ever before, because the world is bugging right now. The world is straight bugging. You gotta have some type of edge. You gotta have some type of consistent tool that can do this, that can help you out so that you know what's going on. Even if you don't understand what's going on, you can know what's going on. Because there's some things that don't make sense, and I understand that. Okay? So right now you got the crypto markets, right, doing their thing. You got Ethereum near record highs. And that's because you don't have those problems like you have with equities. What I'm thinking is that if the Robinhood trader thing is true, which I still have my doubts about that, I do not believe that the that the Reddit thing was a bunch of retail specs. I believe it was the big people. I believe that the whole Reddit thing was a psyop. They were using the retail spec as the scapegoat like they always do when they're trying to plan an operation. And I believe that that's what's happening right now. Okay? Please understand that. All right? You chose the wrong market to operate in. You should have came in and did something in futures or forex or crypto and just left GameStop and them alone anyway. Because the rules have always been in place, and I knew they were going to put a stop to it. They had so many tools at their disposal to do it, and none of it came down from the SEC. It was just the brokers saying, this is what we're going to do. All right? It is what it is. Now, let's deal with this again, too. We got something else we got to deal with. It seems like whenever things heat up, whenever these certain markets heat up, I have to talk about it. There's been a lot of foolishness, again, about the paper market versus the physical market when it comes to precious metals. All right, precious metals is a whole different ball of wax. Number one, it is because the physical metals market is treated by stackers as currency. Gold and silver historically have been a currency, but in the modern world, they're also considered commodities. Sometimes gold and silver will act like a currency. Other times they will trade and act like commodities. You have to understand that going in. One thing has nothing to do with the other. The amount of physical silver and physical gold in the ground has nothing to do with the futures market. Please understand that. It really doesn't. Remember, the futures market, more than any other market on the planet, is built off of speculation. They need the retail spec in the futures market even more so than in the equity market. Okay, this is what it is. So the reason that futures normally overshoot their targets to the upside and the downside is for that reason. Because see, here's another thing too, and this is why the arguments that they were having on the business channels about the whole equity market thing really made no sense, and the majority of the talking heads didn't know or have a clue what they were talking about, is because in the futures market, you have the retail spec, the speculator serves a liquidity purpose. Without him, there's no futures market. Someone has to come between the buyers and the sellers, the manufacturers and the suppliers. Farmer Brown needs to be able to talk to an elevator. All right? And then the elevator needs to talk to a manufacturer. All right? These guys all have risk. Farmer Brown wants to be able to sell his corn for the highest price he can get. The elevator needs to get it because they are processing it. And then the manufacturer, like Kellogg's or Quaker Oats, whatever, they need to lock in prices, all right, so that they can meet their bottom line. Everyone has a need. And this is the part that exposed the business media for being idiots. And they're just reading from a teleprompter or saying what someone's telling them to say. They don't have a clue what they're talking about. I learned this back when I was taking my securities exams and when I was learning the business of Wall Street. You have no idea, and it's none of your business, why someone is taking a short position versus a long position in the market. You don't know what that person's time horizon is. You don't know what their circumstances and situations are. You don't know if they're hedging. You have no idea what a trader is doing. When a person places a trade in the market to buy or sell something, you have no idea what their motivations are, what their reasons are, what their motives are, or what their needs are. You have no idea. You have no idea. So to make ridiculous statements saying, retail specs are short or so-and-so short right now because, you don't know anyone's situation. You haven't sat down and had a conversation with them. You haven't looked at their finance. You don't know what their financial goals are. You don't know what their investment objectives are. You have no idea. You have no idea. So for you to be a talking head on TV making these blanket statements, you have no idea what you're talking about. You don't know Farmer Brown's needs and why he's shorting soybeans, and he's a grower of soybeans. You think that doesn't make any sense. You don't know his objectives and what he's trying to accomplish. You don't know. You don't know why Quaker Oats and Kellogg's is hoping that the price of oats and corn go up. You be like, that doesn't make any sense because then it's going to cost them more to produce. You don't know that. You don't know their situation. How you know that they didn't buy Farmer Brown's farm and they're making money on both sides? That's why they need that, or for whatever reason, tax purposes. You don't know what they're doing. The list is infinite. Why people are buying and selling in the market. You don't know that. You can't make blanket statements and say, "Oh, so and so's ignorant if they're buying GameStop because it looks like it's on its way to bankruptcy," or they're idiots because they're buying stocks that are in bankruptcy or have filed for bankruptcy, or whatever. Again, you don't know people's investment objectives, and you don't know their circumstances and situation, and you can't even identify specifically and exactly who is doing the buying and the selling. You dig what I'm saying? So for people to make blanket statements about investors of any kind, especially the retail spec, who's been the whipping boy Wall Street forever, you can't just make statements like you know why they're buying or selling today. You don't know that. You don't know that. You don't know. It is what it is. Unless there's a full disclosure, unless every party, whether it be a fund or an individual, is disclosing all of their open positions, you don't know what you're talking about. You just don't know. Now, I know you can say, well, in commodity futures, they issue the COT report, which is the Commitment of Traders report. Yeah, but what you fail to realize is that the COT report is a month old. By the time it comes out, those people are out of those positions and have entered new ones. So it's useless. Back in the day, it kind of served the purpose before the internet. It had its purpose. It had its day. But now it's irrelevant. You don't need it. See what I'm saying? When you don't understand the history of things, folks, you really do hurt yourself a little bit. You know what I mean? That's why you got to do the knowledge to things. You got to really understand what you're talking about before you just open your mouth and sound like a complete nincompoop. All right? So that's why we do what we do. Not to mention, when the stock market was created to the form that it is now and evolved to this, remember, it has an upward bias built into it already. Short selling is a tactic. It's a trading tactic, but it's not the sole reason that the equity market exists. The equity market, really, to be honest with you, the majority of people that operate in the equity market are long-only strategists. They're looking to buy. They're looking for opportunities to buy stocks that are positioned to go higher for whatever reason. Long-only strategies, just so you know, is the oldest stock market strategy, long-only. And you can actually do very well going long only and never shorting in the stock market and still make an obscene amount of money. I know people who have never shorted a stock a day in their life, and they won't ever. They don't want to. They only buy. And when the train stops, they get off. They control their greed, they manage their greed, and they get off. All you had to do was operate in the GameStop when it was rallying like it was. All you had to do was lock in your profit, and then when the market pulled back, get out. You're out. You're done. You're done. That's it. That's all you had to do. And you would not be having this. You would not be seeing this situation. You would not be seeing this situation. It is what it is. And you don't know what's what. But just keep in mind, folks, when you operate in the equity market, you are agreeing to go into one of the most heavily regulated markets on earth. And it always has been, and it always will be. That's why they have the futures markets. Why do you think they made futures? So that you can not have to deal with that. That's why you have financial futures. That's why you have the stock index futures. You got the S&P, you got the Dow, you got the NASDAQ, you got the Russell, you got the knife. You got the euro dollar futures contract. You got the pound. You got the Aussie dollar futures contract and even micro futures. And you got gold and silver futures. Why do you think these things exist? They exist so you don't have to worry about all the restrictions that exist in the equities markets. That's all, folks. That's it. That's why they exist. That's why they do what they do. And now you know. How do you say, when you know better, you do better? All right. So I'm hoping that someone got some enlightenment today. I'm hoping I was able to shed some light on what's going on here. All right. And I'm hoping that you guys finally get it. Okay. I'm hoping you understand this. All right. There's other agendas at work. Okay. There are agendas. And you have to really think about these things when you go in. All right. Always ask a question, who benefits? Always ask who benefits. Because while everyone's watching GameStop news and all that, you got Tony Blair saying that it's inevitable that you will see a global vaccine passport and it will be implemented now. The G7 and G20 is talking about it. Did you know that? While everybody's watching GameStop, you don't get to see what's really happening. They don't want you to see that. They're trying to get your attention elsewhere so that you don't see what's happening. There's a takeover happening. Having a new White House is just a sign of a new day, of a new world order. It's all symbolic, signs and symbols, and you need to start waking up to it. This is really the rise of the machines, ladies and gentlemen. Okay? The rise of artificial intelligence. You will see in the days, the weeks, the months, the years to come, that behind all this stuff that's been happening we're a year into it now, has all been on the back of artificial intelligence. All right? Artificial intelligence is behind all of it. Remember when I did the special coverage on the machines? I talked about that. I explained to you that the reality of failed models. We talked about failed models and how the whole lockdown thing was based on a failed model that had never seen real life, real world application. Even in history, there was no real application. This was all just a theory that was being touted as a fact. And they shut down dissent so that you didn't get to hear the dissenting voices. They just shut them out altogether. Well, that's what's behind all of this. the algos, folks. It is what it is. All right? It's about power. It's about taking over. It's about authority. At the end of the day, someone still wants to rule. And they found the perfect way to do it. And that is by controlling what people say, controlling what people hear, and controlling what people see. That's what it boils down to. And then controlling what you think. If they can control what you hear and they can control what you see, then they can control what you think. And that's the real agenda that's going on here. They want to control what you see, they want to control what you hear, and they want to control what you think. Something to think about. Smash that like button. You know what it is. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Come on over to PulseWave Trading. Put the power of the PulseWave reports in your hands and watch your life change for the better. And I'm out. Peace.